Thank you for tuning in and welcome back to Home Ownership Tips. In today's video, we'll talk about 5 tax benefits of owning a second home and whether that's right for you or not. My name is Andrew Finney. Please consider me your real estate geek. I'm always here to help. My contact information is in the show more description below and at the end of every video. So before we begin, please let me tell you that I am a licensed real estate professional in Nevada. I am not a tax accountant, tax professional, or financial planner. I make this video to give you some ideas and talking points with your tax professionals and with your attorneys or whomever you have assist you with your financial planning decisions in owning a second home. So let's go ahead and go into it. Number one, we have mortgage interest that you can deduct again. So you have a mortgage interest on your first home, your second home, or however many homes you have, but your first and second, you can definitely deduct your mortgage interest so long as it's in the tax code. Ask your tax professional about that one. The second thing is actually home improvements. If you're using a HELOC, which is a home equity line of credit, there's going to be a certain amount that you can deduct towards home improvements in your second home, whether it's your main home or your second home. The trick is whether you're single or whether you're married. It's again, the tax code is changing all the time. You got to see how the tax filing requirements are for that year, and the tax code looks that year for what you may be able to exempt on these type of properties. There are limitations in the amount of money that you can actually withhold, but again, we all know tax code changes every year. Check with your tax professional. Number 3 are property taxes. There's good news with that. Sometimes you can deduct your property taxes in the second home, but you need to be very clear on whether you're going to be which home is your first home and your second home, and that'll come a little bit later in this video. But it's very important to know that you can also look at deducting your property taxes, so it's important to know that. The fourth thing is if you rent out your home. Now this one's really interesting. If you rent out your home for only 14 days in a calendar year, then you won't have to pay at least ways of the 2016 tax code, according to what I'm reading here, you would not have to pay any taxes for that 14 days of rent. And it doesn't matter how much it was. So if somebody was renting out like $1 million a day for 14 days, 14 million, you wouldn't have to pay tax on that? That's score, big time, right? Now only to find that person out there that'll rent for $1 million a day. A little bit more difficult there. But the point being is that there are some different provisions. Now, you go on something like Airbnb, you're going to be renting it out for an excess of 14 days a year, then you're going to need to get ready to do some heavy-duty math on that with your tax accountant and professional to make sure that everything's checking out for you. So the fifth thing that brings us full circle around, when is it time to sell? So when it is time to sell, and if you've been spending so much time in your second home that you forgot which one is your primary residence, which one's your second home, you really need to think about that before you decide to spend so much time there, because you'll want to make sure that whatever property you're getting ready to sell is the primary property or the second property. Because if it's your primary residence, you're going to have a tax shelter on your money. If you're a single filer, up to $250,000. If you're a married couple, then up to $500,000 of tax of money that would not be taxed out of the equity proceeds of the sale of that property. But the trick is you got to be there within the most recent 5 years. So let's say that you have 2 homes and you were 2.5 years here, 2.5 years here, and you were receiving mail here and mail here. And it's going to be a little bit difficult. You're going to need to be able to get mail all in one address, voter registration from one address, and that needs to be considered the primary property. So, and that needs to be essentially for like 3 of the most recent 5 years. You've got to live in that property to qualify for those tax benefits. Again, I highly recommend that you talk to your tax professional about this. You can never know too much or know too many questions to ask your tax professional to find out what you can do, because the system is so convoluted that we always need to try to help each other and figure out what kind of tax provisions we can have and deductions that we can make and exemptions that keep more money in our own pocket to help ourselves and our family and our friends and our charities that we like to help out. So if you have any questions about this, or you have some other tax benefit suggestions you would like to see in another video, or just share it in the comment section below, please feel free to do so. I'm going to put my contact information up in case you want to contact me. Even if you just want to say hi, I always enjoy hearing from you. Now, if you learned something new from this video, I'm going to ask you to do 3 things. Number 1, please subscribe to the channel. Number 2, please like this video. And number 3, please share this video around with somebody you know is going to be able to help. Thank you so much for watching today. I'm wishing you and your family all the love, wealth, abundance, and happiness in the world. We'll see you next week. Enjoy a wonderful day.